Thank you for joining iMeet. When you hear the tone, you will be the 18th person to join the meeting.
Okay, just want to check, make sure everybody can hear us. We've had a little bit of problems with that. I'm not getting a signal on this end. All good here? Okay, great. We'll get started then. Okay, I'm David Blake, and this is our Tuesday Tech Talk. What we're going to do today is quickly review the last couple of days, try to figure out what the market's going to do, and then we'll look at the different indexes. But today it's going to be a little bit different because the last 2 or 3 Tech Talks basically have covered the same thing, and there's really nothing that's changed going into this week. So I don't want to rehash the same old things again. So what I want to do is touch base on the indexes real quick, and then I want to open it up to questions. And while you're writing questions down, we're going to review one of the Doc Talk stocks and kind of show you what that portion of the website can do for you and help you maybe use some of the research tools on the site a little bit better. Briefly, last week, the major averages were down for a second week. We had the Russell 2000 was lower for a third week. We saw additional deterioration in technical indicators and internal breadth. The CTI was unchanged at -10. For new guys, that's the cyclical trend index, which makes our market posture still bearish. We are scheduled to possibly flip this Friday if the Dow Jones intraday or on a closing basis holds above 17,959.85. We also would like the S&P 500 to stay above 2114.72. Those numbers are also in the weekly market letter if you didn't catch them right there, so you can kind of watch to see if those hold or not. If they do hold and we see an improvement in the momentum index, we'll flip to a bullish market posture on Friday at the close. Okay, the momentum index fell last week from a -2 to a bearish -6, so that also showed deterioration in the broader market. It also shows that the other indexes were going down more than the Dow a week or so. Sentiment index was neutral, +2, so not getting much there. However, one thing I want to bring up is that even though if we flip to a bullish signal on the CTI on Friday, it's only scheduled to remain bullish for about 4 or 5 weeks. So in this case, I would probably use the bullish call rather than looking for stocks to load up on. I probably would be looking more to sell rallies over the next few weeks once we flip it. For exit points, you might want to make mental note of the stop loss that we give you on the second opinion report, or maybe for some shorter time periods and trades. Maybe if what I like to do a lot of times, I'll put up the 10 and 21-day moving averages on a chart. I'm looking to buy days above the 21-day, the stock's above the 10-day. But when the stock falls below the 10-day, I'm getting ready to pull the trigger. And once it breaks the 21-day moving average, if I'm trying to hold it for longer, I'll usually cut bait right around that time. So that can provide you some guidance as far as maybe getting out of some positions, because it's very, very likely that if we go to another sell on the market, sometime in November, that'll probably be the bottoming point of this cycle, and then we'll probably be ready to go, on a bullish cycle again after that. Okay, real briefly here, I want to pull up the Dow Jones. This is a little bit busy, but what you're looking at over here is this line right here. This is what's been going on. Let me get my little arrow here. Okay, this has been going on. This is what we call polarity in a line. What polarity means is old resistance. You can see it bumped in there, bumped here, bumped there, finally broke through there. And now we've come down here and hit what used to be resistance, now support, down here and bounced off this line several times, broke it briefly last, Thursday, and we gapped up, and then we came down yesterday, and we gapped in today. But this 18,000, 1850 area is really held support, and there's a possibility that maybe it won't break that. But today we jumped up here. The Dow's at around 18,185, so it's struggling to get back above the 100-day moving average. The S&P 500 is right at its 100-day moving average. The NASDAQ again is a stronger index. It's back above its 50-day. But anyways, but up here, even after you clear this 100-day moving average, the next average is the 50-day moving average, and you also have a descending trend line. So that's going to be pretty tough for the Dow to get above 18.3. If we struggle in here and we flip to a buy, maybe we can get up, we can make a run on that thing once the CTI goes bullish. But at that point, if we would go above here and then start to pull back, I'd want to be selling there. You also see some more deterioration in the technical indicators and the MACD, which flipped over to bearish back here at the beginning of September, continues to be bearish on that. Okay, the next one is the S&P 500. Very similar, lots of stuck in this trading range, a lot of consolidation going on here. Actually, intraday, you briefly broke below that support line. And again, we go back to talk about that polarity. This was resistance back in here, and now it's providing support to the different indexes. But we see around, especially 2120 or 2125, you'll probably see a little bit of a pickup in selling. Yesterday, the reason I wrote in the daily commentary yesterday that we expect a spike this morning was because the Dow and the S&P 500 both sat on their support ranges all day. The S&P 500 sat on 2125, and the bears couldn't knock it out of that range. Usually, when you'll see that happen for the whole day, yeah, you can expect to see the bulls get a little bit rejuvenated and come in and give it a spike, which we saw today. However, we're not. Again, we need to get up around 2180, 2160 up here. We're 2143 on the S&P 500. So you're kind of fighting this 100-day moving average, nothing big. Again, you see the deterioration in the technical indicators, which means that the underlying strength is not there. Now, longer term, I brought this. This is up going back about 8 years. 8 years. This is going back. The upper trend is still intact. So this can come all the way back to about 1900 or so, and the uptrend is still intact for the S&P 500. So anything that we get a pullback in here, this 2000, 1900, 1950, something like that, is going to represent a great buying opportunity for you. Now we break that, we'll rethink it. But I think at this stage, anything that we get a breakdown here, if we do, would be an excellent buying opportunity for the long term. Another thing I want to show you this is that we usually don't look at these charts, but if you're not familiar with point and figure charts, X's come into play when the market's going up. When it's trending down, zeros come into play. The 5, 6, 7, 8, 9 represent July, August, September. A represents October. You can see we're in a downtrend at this point. Interesting here, if we go below 2120, if we get a print of 2119 today, it'll put another 0 over here, which means we're getting a triple bottom breakout, which is a pretty strong signal that we're going to get a pull back down. Now you don't see any real support in this area until we get down here around 2040, maybe even around 2010. You can find it's very easy to find support and resistance areas on point and figure there. So again, watch that. If we get a print of around 1919 intraday, even that'll pop this thing down into a new string of zeros, meaning we're headed lower. Okay, here's the NASDAQ. Again, today we're at 5260, up over 1%. 5260 puts us right up here, just above the 50-day moving average. That's where you would expect to find resistance. We'll see if it can hold here. Again, you do have the deterioration in the indicators, and we actually just negative on the NASDAQ with the MACD long term, which is an intermediate thing, right over here. This, it came up here, kept bumping into this new high area, couldn't do it. So the path of release resistance looks down. It'll be interesting to see if we can hold this 5260 area today. If it doesn't and it comes back down, we only end up kind of flat to lower. That's just another negative sign for the broader market. Okay, if we go ahead and look at this, we'll need a move above about. Well, we might get a series. Let's see. It's hard to tell on these indexes where you're going to get the next round of X's coming up here. I think these are 10 points at 1028. So it's very likely we could get another round of X's coming up at around 52.60. If you're probably going to get a little bit more of a breakout, but you kind of want to watch this trend line 5200 when it breaks that, which it did briefly yesterday. We can get in a row of circles coming down here. There's not a chart of strength yet. In fact, here's the Philadelphia Semiconductor Index, which has been struggling with the 50-day. This is positive at this stage. You want to keep watching on this thing. If the SOX index or Philly Semiconductor Index breaks below 800, that would be bearish. 790 would really start to see this thing roll over. Would probably mean the Nasdaq's going to come down with it. Okay, next here's the Russell 2000. I haven't fixed this chart yet for some reason, but that's also rolling over. You can see the deterioration in the technical indicators. This is the 30-day stochastic, which is below 20, which means it's actually in a trend lower at this stage. MACD also is bearish, and we're kind of going along this polarity, and there's this old support resistance area. It comes down here and breaks below this 1200. That would probably induce more selling. Go over here to the point and figure chart on the Russell 2000. Again, if we break below 1210, you're going to get another zero in here, and that probably means that you're going to break lower. 1170 would be the next support area if this thing starts to trend lower. We can always keep talking about the transportation index, and again, this thing looks actually a little bit better than the Nasdaq at this stage. It sold off last week, ran right into the 50-day moving average, bounced off of that, came down here a little bit yesterday, and still had a decent show. Today we're at 80.46, so we're right in this area here, almost halfway back up. Still not making much headway. You want to watch this ascending trend line and that 50-day. If it breaks below 8,000, 70.90 or 79.90, some of that area, you want to keep an eye on that. That would be a negative for the broader market. As long as this stays above 8,000 or 79.90, that's one banner light there that we can count on. It's bullish for the broader market. And also, although we're in a negative string of zeros at this stage, we'll need to get above probably. I don't think today is going to do it because we're only up 36 points. But you want to see if this thing's going to go up. If we go down here around 79.50 or something like that, then you're going to have a double bottom breakout, and that would probably signal that all the constructive action we had in this area, trying to break out to this 81.50, 82 area, is starting to break down. So that would be negative for the market. Now here's something else that we have that we look at as far as you see the Nasdaq outperforming, but we talked about last week that we're seeing a pickup in the FANG stocks. That signaled a lot of trouble when we talked about that last November and December. As you can see over here, although the Nasdaq again is pushing, up within a couple percentage of new highs, you're having quite a rollover in the advanced decline line. This is negative divergence, and it's also showing that you're getting the big moves on the Google and Facebook and Alphabet is Google, Amazon again. So you want to watch that. That means you have less participation in that move up of the Nasdaq, but they're overweighted, and that's holding the index itself up. So when they start to roll, so this thing starts to pick up. So that negative divergence is something you want to keep an eye on. Another negative divergence is this line right here. This is on the Nasdaq. It's the new 52-week highs versus new 52-week lows, and you've gotten the crossover on here. Again, negative divergence. We've had more new 52-week lows over the last 6 or 7 straight days. So again, negative divergence on that. It means you're having more stocks are making new lows than are approaching new highs, and you want to keep an eye on that to see if we can get any improvement going forward on that. I have a couple questions on here, but so if you do have a couple questions, I want you to go ahead and start typing them in now, and we'll get to that. And while you're typing them up, I'm going to go over one of the Doc Talk Stocks reports that we have on the markets page. But here's a question that's coming in. Okay, it seems like the FANG stocks are running. Can you give us some entry points if we want to invest or trade? Do you think they're a good idea right now? Yeah, I'll look at the FANG stocks here in just a couple of minutes. The next one, real briefly, before we go into this report, while you're typing in stuff, talk about a bad-looking stock. For example, Johnson & Johnson had a good earnings report, earnings beat, improved forecast is down today. Okay, how much do you think of such stocks? All right, we'll look at Johnson & Johnson later, and also some long ETS for 2007. But speaking of a stock that looks bad on a report, let's take a look at this. This was came up last Tuesday. This is a company called Raytheon. The symbol on this is RTN. If you're not real familiar with the .tuck stocks, we try to get pull three stocks out of Barron's or off of a wirehouse that's upgraded or downgraded stock. We give a little write-up about what the fundamental story is. In this case, Baird Equity Research, they like Raytheon. They think it has potential to get to around $170 a share. That's about 25% upside. They give you several reasons for that. But then when you go over to the market edge opinion for Raytheon, we had downgraded it to an avoid a couple weeks ago on September 20th. The power ratings are -27, score is 0. The C rate looks like we have another couple percentage points down. It is rated a 3-star rating by S&P, and we give you, of course, the second opinion report. It talks a little bit about the indicators and what's going on with that. Then we take a look at the chart for you. In this case, Raytheon is in a nice, ascending trend line. It's bounced off of this line several times, and so we have an avoid on a stock that made a new high back early September. Now we're kind of consolidating those gains and going sideways. It's up about 48% over this time, but you are seeing some negative divergence in the indicators. Here's the MACD has rolled over as negative. RSI is going sideways, showing consolidation. So what this is telling you, if you're looking at this chart and you're long the stock, but the indicators are telling you that you still got some sideways action in this thing. It doesn't mean every avoid you go out and try to short. But in this case, we are seeing weakness, seeing negative divergence. If you come down here to the calendar of technical events, 6 of the last 7 technical events have been bearish. So the stock's not falling apart, but it was just telling you if you're looking to buy this thing, you may want to wait until it comes up here and recaptures the 50-day moving average. So again, as mentioned above, the stock's trading below its 50-day, which is a negative. The up-down ratio shows when it's under accumulation or distribution. It's been falling since right before it made a new high. So that again is showing negative divergence. And what we're telling you on this thing, even if it's an avoid, and Baird says you can buy this thing and get out at 170. We're kind of looking at it over here. We think it looks sideways to down over the next 30 days or so. And you may want to wait until this thing actually comes up to a early entry buy candidate if you're looking to buy it. That tells you that maybe the technical picture is starting to improve. And if you get a little move above this 50-day, that's telling you that maybe we could see that would be the time to buy it. A lot of times you look at a stock that looks good technically, and you'll see a negative report on the second opinion, or you might see an avoid. It doesn't necessarily mean you go out there and you dump the thing just because it has an avoid. What that's telling you is the stock's going nowhere probably over the short term. And you're seeing some, it has a better chance probably of going down at this stage than up. So what you want to do is wait till those technical indicators improve. I mean, when you look at some of these stocks for trading ideas, we'll talk about what's weak on it and what you want to look at and where we would go into it. Okay, a couple more stocks to look at. Okay. All right, I'm going to go ahead and shut this thing down. That's pretty much all I had for this thing. Here's the stock as of yesterday on Raytheon. As you can see, we actually have still that descending trend line. It's battling to stay above the 100. This isn't a chart of strength. Today we're up 40 cents. We were lower by about 50 cents earlier. So it's kind of trading back and forth in this thing right here, running into resistance up here in this trend line. So again, that's stuff that you want to look at. I'm trying to write down all these things coming in here. I'm going to go ahead and shut this down, and we're going to go ahead and pull up the regular chart on here, so we can go over some of these things and share the screen. Okay, can you see that, Will? Huh? Okay. All right, so let's take a look over here. First question we have are some of the FANG stocks. So we'll put in Facebook. Facebook today always looks good. You've had quite a bit of consolidation coming in here, but even on the pullbacks, you've been able to stay above the 50-day moving average. You have some negative divergence coming in here on the 30-day. Let me change it to 30-day over here. Stochastic. I'd like that to see if it's going to start to trend. You're starting to, you're getting weaker over here. The MACD long-term actually just went. You may have some pullbacks on this thing. If I would see Facebook come back down here to 123, where this support area is right here, I would, it holds that area. That would be a definite entry point for me. I own the stock, and I would maybe add to the position if it came down here, if the broader market rolled over. And I noticed Google. Let me take that off here. Google, same thing. Just like the broader market, you're in a consolidation pattern. You're up today a couple more bucks. You're up around 8.15 or so. So you're trying to break out to the upside. Everything's still pretty much neutral on Alphabet and Google. To buy it, I probably wouldn't be buying it here if I own it. I'm holding the stock and probably going to sell calls or do something over here if we see the thing falling below $800, especially if it breaks below this low from early September around 785. That would probably mean that the broader market's going down also. Amazon. Pretty much. Amazon over here is kind of rolling over here right now. You might get a chance to come down here and test this 50-day. Indicators rolled over with it. MACD looks like it's getting ready to go bearish. I'm not looking to buy these stocks at the new high yet, because I say if we go to a bullish market posture, we're only going to be bullish on these things for this market for maybe 3 or 4 weeks, and then we roll over again. So these stocks that have had such a big move, I wouldn't be wanting to add or buy them presently. I would wait for pullbacks. In this case, where you can get Amazon down here around 760 where the 100-day is, then I probably would be interested in pulling the trigger on a buy and see how the other indicators move up on it. We had one to look at Met. Okay, MetLife has had a pretty nice run in here. Part of this also is due to interest rates possibly going up. Yesterday, one of the problems was some people were talking about, okay, December is not a sure thing yet. If the Fed pulls the rug out from under us again, the bank stocks could get hit again. They keep doing that. But as far as the insurance companies look, I think that looks good. If this thing kind of breaks down below this, it filled the gap here on that gap up, which is very bullish. As long as it stays above 46, Met looks good. Everything looks fine on it. And I like the industry group. I think the industry group is also bullish on that. And SPXU. And this is the ultra short S&P 500. If you're in the leveraged because of the CTI call, if you're up about, even with today, you're up about 2%. We haven't gotten much action on this call, this short position with the with the CTI call yet. But it's kind of it's basically kind of kept you out of the market from September 2nd, which is over here, during this time period. So it's been a weak period of the market. Hasn't done much. We'll see what happens, of whether the thing can, what's going to happen. Maybe it stays range bound for another couple of months. Hard to tell. We also had a couple. As far as ETFs go, I'm going to cover that on a different day. What you want to probably do on the ETFs is if you go into the ETF Center and also the industry group analysis. Just try to find the strongest industries, and then you can then go over to the ETF center. Say if it's I don't know, say if airlines are the strongest sector or industry group, you can always go over to the ETF center and find an ETF that correlates with airlines or the transport, something like that. Let me run over here and see if we've got any more questions coming in. Let's see. Okay. Suggest using a triple. Yeah. Okay. Again, I usually go all four indexes when I do the when I flip the ETFs on the market posture. Again, the reason being, one of the reasons is from when we went from May to September 2nd, the Russell 2000 was up like 25% on the triple leverage ETF, whereas I think the Dow Jones was we only made about 12 or 14%. So if you have sometimes on the down, when you're wrong, you might get hiked a little bit on off the Russell one or the Nasdaq one, but when you're right, you're probably going to make more money on those. Again, this last call, if you'd gone long and short the triple ETFs since the beginning of the year, you're up about 43% year to date. Again, this call we're up about 1.5 to 2%, so we're not doing much on this. Again, we'll flip out of those on Friday if we change the market posture, and I probably will go long on the ETFs, even though it's only scheduled to go for 4 or 5 weeks. I will still flip and go long just in case we get a breakout to the upside on that thing. Okay, but then your expectation of a week move up the next bullish, I do advise. I say I'm going to go. That's just my discipline. Because the way this market goes, I mean, even though I don't expect a lot over the next, say, 2 or 3 months out of the market, you can still get a run to a new high on this thing, where you pick up 300-400 points to the upside on the Dow Jones. With the triple leverage thing, you're picking up 900 to 1,000 points, so you can still make yourself maybe 4 or 5% on that. Don't try to outthink it. Think it exactly. I've done these things before where I thought, well, flipping to a buy on Friday, supposedly if the Dow doesn't break the low and things look good, and on here, lo and behold, on Thursday or Friday we go down 250 points, and we extend the period out, and the next thing you know, we're still bearish for the next 3 or 4 or 5 weeks because of the cycle getting extended, and you're on the wrong side of the trade. So, now on the other side, if you want to cut your losses at say 5 or 6 or 7%, if you think the call is long and everything's improving, you can go on that. But I don't try to front run it very often. And sometimes I think it was in the spring, one of the second calls we made, it actually the market went down like 300 points before it reversed course and went back up. We ended up making 20-some% on that call. So I'll flip it, for myself. I'll go to the leverage probably on Friday if we hold these lows. Now this week, but again, it's only for a 4 or 5 week period. It's GoPro. Let's see what we got on that. I don't know what you like on this. The only thing that's somewhat, wait a minute, somewhat constructive is the your balance. This thing breaks below this 14. I say 13 and a half area. This thing's gonna, I think your upside's limited on this thing. I just don't really care for that. If you can get it and go long and stay in this channel, that's not even a channel really there, but maybe you could, if it holds here and starts to go up, you can buy it, and I would sell it either right there or see if it breaks through that. Keep a tight stop going up to that thing. Again, in this case, this would be something where, since you're going for the short term, you go over here and put in the 10-day and the 21-day. And in this case, you're below the 10-day and the 21-day, so you're not looking to buy this thing yet. You want this thing to come on back down. You don't want to buy anything. If anything, you're looking to short if it gets up to around 15 at this stage. You have to look at some other stuff on that. Yeah, it's been about 30 minutes. I don't see anybody typing in there. Again, I'm sorry we didn't cover all the sectors and stuff, but again, the market's stuck in a trading range. It's a very narrow range. You know, yesterday the bears took it right down to support. They couldn't take it any further. Today we gapped up. They take it up to the 100-day moving average from the bullish side. Can't break above that. Tomorrow, you know, we'll see how this thing ends. If this thing ends up where the Dow's only up, you know, 50, 60 points, we got a push for the week so far. So, although the Nasdaq's looking good today, but again, this S&P 500 can't get above 2145. That's bearish. On the other side, it can't break below 2125. So that's bullish. So next week, hopefully, we'll have maybe this thing we'll talk about the CTI going bullish or what we expect out of that. Maybe look at some upside targets if we do go bullish. Other than that, again, so I didn't have anything new for you, but I appreciate you taking the time out of your day to join me, and hope you have a good week. Thanks.